friends, it's Nakia and I'm back with another video. Today we are going to touch on the ChildCare Stabilization Grant and a few little tax tips. You as a childcare provider, please make sure this year you research the person that you are going to do tax with and make sure that the tax preparer knows and understands the unique tax rules affecting the child care leaders this year. Okay, guys? So now to the stabilization grants. The stabilization grant, first let me say, is in every single state. Every state have a form of stabilization grants. We are going to touch base on New York City, New York State in general, just so you guys can understand how important it is and what is out there and how we use it in all states, okay? So New York City has received $1.1 billion for the stabilization grants. And guys, guess what? Only $700 million has been allocated. That's so much money left on the tables that this is why you are going to share this video and send it to another child care leader, because there's no reason why we have so much money sitting there and we all could use it. Okay, guys, so I need you guys to share this video and send it to another child care leader in the industry so we could just help each other. Now, the deadline to file the application is November 30th. Providers must be licensed and registered as of March 11th, 2021. Out of 18,000 providers in New York, guess how many only received the funds? 13,000, guys. 13,000. So there's a whole bunch more people that could receive the funds. So this is why I say this video is crucial. So providers are eligible even if they don't have no children in their facilities or in their home. Do you understand what I just said? If you don't have any children at all, you are still eligible because they want you to get more children. They want your business to thrive. This is what the grants are for. So you are still eligible if you don't have children, guys, okay? Now, a family provider can expect to get an average of $19,000, and a group family can get an average of $38,000, and center breaks could get even up to $100,000+, guys. Okay, so there is money there for you. Now, these grants will be paid out in 6 monthly payments. So for 6 months straight, you will be receiving this grant. What they will be doing is that they will be contacting you through email and asking you if anything has changed in your business. If so, you say yes and you write what it is. If not, no, and they will continue funding you monthly. Okay, guys? Now, what can these grants be used for, right? All right, if you don't have an employee, they can be used to pay yourself. They can be used to pay yourself, and then you could do whatever you want with the money. But hopefully it's to build your business, build your brand, okay? Rent, mortgage, utilities, insurance, maintenance, improvements, mental health support for the owners, children, and staff. That, I believe, is so important because we suffered through a lot right now, and you don't know how it has affected your employees, also children, and definitely yourself. So it does cover that. It covers staff development. It covers equipment. Providers do not have to show receipts. You do not have to provide any receipts at all. But you guys know how I am. I advise you all to keep documentations of everything you use these grants on. And at least for 3 to 5 years, keep it stored, secured, just in case they do come back and ask you for proof, you guys will be able to share the information and you're fine. Now, what are the tax consequences of this grant? Is it taxable? Is it not taxable? Is the question. So this grant is taxable. It is taxable, but I hear a lot of providers telling me, oh, I don't want to be taxed on this, so I'm not going to get it. You will actually benefit more by taking this grant. You can spend it on expenses in your business and make your business grow, and your tax liabilities will still go down, guys, because you're spending it on your business. You're spending it on what you could spend it on according to what I stated earlier. Okay, guys? So don't be that person that says, I'm not going to take the grant because it's taxable. So does that mean you're not going to take income from the parents because it's taxable? No, right? Okay, you're still going to take it, right? So guys, definitely sign up for this grant. So all the money will be taxed and they will be giving you a 1099 this year. So you will be able to provide it to the tax expert. Now, guys, if you have Medicaid, if you have Section 8, if you even have public assistance, these grants may or may not play a role in you qualifying for these things, continue qualifying for it. So I definitely suggest you guys call the Section 8 or Medicaid and things of that nature and let them know that this is a grant just to assist you for the time being and is not a continuing thing. Okay? So, what to do with the grants? I suggest if you take the grants, which you are going to take the grants, I suggest that if you're paying yourself and you don't have employees, definitely save at least 30% for taxes, guys. At least 30%. Those paying the estimated taxes may need to increase that amount as well. Okay? Now, a few tax tips that I wanted to share with you guys. Guys, when it comes to the food reimbursement, that is taxable. You do have to claim that, okay? Don't let anyone tell you you don't. You do have to claim that. And I also suggest, guys, you take good record keeping. That will help you so much in taxes if you actually keep receipts of everything. Use QuickBooks. It's very important. Don't be that one that comes to me, for example, and bring a whole bunch of receipts, because I'm not doing that. I'm not looking through all your receipts. You guys need to get a QuickBooks software now. Take pictures of everything. You don't want to have receipts on the paper, because guess what? That erases. So God forbid they do audit you in 2-3 years, that's gone. You can't even see it. So I advise you guys to snap pictures. QuickBooks is the easiest thing. That's why I always suggest QuickBooks, because when I go purchase something for the center, I snap a picture right away as soon as I get the receipt. Quick, and it's in my QuickBooks software saved, guys. You don't want to be that provider that comes with a whole bunch of papers and say, I don't know what to do. Now your money is all over the place. Now your expenses is all over the place. And it's going to be hard for us to be able to get you the best amount back or just lower your tax liabilities in general, guys. You understand? So definitely I advise you guys, if you guys actually need any bookkeeping, we do bookkeeping. We are starting actually now. We're going to start bookkeeping for you guys if you guys need it. I have an amazing team right now. We're getting bigger and stronger. So we have bookkeeping ready for you if you want us to now capture the bookkeeping. Because another thing that's very important is that we have PPPs. We have the EIDL grants. There's things that don't have to be, that are non-taxable, and there's things that's taxable. So you have to make sure that your bookkeeper knows these things as well, because if they don't know it, they're going to just put everything as taxable income, and you're going to be basically taxed for everything that you shouldn't be taxed for. So make sure you go with someone that understands this. Make sure you go with someone that also, or if they don't understand it, you need to be the one to make sure that your bookkeeper knows exactly what's taxable and what's not taxable, because you don't want to get taxed on money that is not taxable. All right, guys, so definitely go get yourself a bookkeeper. If you need us to do your bookkeeping, my number is down below. Contact us. We are here for you. Let's start these books so we can get ready for these taxes. Taxes is right around the corner, guys, and I'll be sharing everything, all the new things that is going on soon. Okay, guys? So once again, I'm Nakia, and it was amazing talking to you guys. Remember, share, like. Talk to you later.